Hi, I'm Mitchell.
Hi, I'm Sean.
This is Egen.
I'm Alyssa, and we will talk about the 4 aspects to consider when choosing a structure for a business.
Often, the main consideration when establishing a business structure is asset protection. Asset protection is a two-dimensional concept as it looks at protecting both the assets of the business as well as the assets of the individual. The reason why asset protection is regarded so highly is because the assets of the individual and the business are typically worth considerable amounts of money. There are two main ways to protect an asset. The first level of asset protection is through the use of insurance policies. Business owners need to ensure that the level of cover provided by their policy can cover any damages that the business might have to pay if they are sued. In circumstances where there is no policy or an inadequate policy in place, the business and the personal assets of the owners could be at risk. Each business structure, sole trader, partnership, trust, and company provide different levels of asset protection. It is essential to plan out which structure is most suitable on a client by client basis. Incorporated entities naturally provide a greater level of protection through a concept known as a corporate veil. This concept provides legal separation between shareholders and the management of the entity. This concept ensures that the assets of the incorporated entities are different than the assets of the individual. If a sole trader is chosen to be used, the following safeguards can be used to attempt to protect the personal assets of the owner. Firstly, move the personal assets into another structure, such as a trust or a company. The negative consequence of this is that there is no main residence exemption that can be applied, as the home is not legally owned by the taxpayer. The most important factor, however, to consider is the control of the entity. Secondly, you could move the personal assets of the individual to a parent or a spouse. The negative consequence of this, again, however, is that the individual no longer owns the asset and therefore could be sold from beneath them. To allow the greatest level of protection for business assets, different entities can be used to create a business structure, creating one entity as a trading entity and a second to hold the assets. The trading entity then leases or rents the assets from the holding entity. Therefore, if the trading entity is sued, the assets are safe.
Income tax minimization. Commonly, most individuals and companies would aim to pay the minimum amount of tax as possible. Specifically, no tax will be payable to individuals who earn less than $22,000. That is the current tax-free threshold in the COVID-19 pandemic. Companies are commonly the chosen business structure for tax minimization purposes, mainly due to its lower flat tax rate of 30% or 26% for small businesses. ATO, tax planning ensures individuals the legal right to plan and structure their associated financial sources of income to reduce the tax payable as long as the individuals abide to the tax laws in place to avoid breaking the law or tax avoidance, such as exploiting intentionally both the supernatural and various systems in tax. Many types of tax minimizing strategies out there, and today I'll be sharing you 5 popular tax saving strategies. Firstly, for asset structuring. The holding of investments or assets should be taken into consideration along with the most suitable business structure to be used. For instance, using a trust allows for a capital gains discount of 50% or 30% for companies in which will be in favor to the taxpayer, assuming the asset or investment generates higher returns every year. Secondly, will be early stage investment companies. The benefits given to this would be tax offsets worth $10,000, a CGT exemption if investments are held less than 10 years, and concessions given will be a claimable tax offset of 20% on the initial amount invested. Thirdly, will be early stage venture capital limited partnerships. This involves a few different investors with a minimum capital of $10 million, which in turn receives an offset of 10% on the total amount of investments being made. Negative gearing basically means the investor income attained is lower than the expenditure paid in holding the investment. For instance, a property investment attains $30,000 in rental income annually, along with $40,000 in maintenance fees. In this scenario, would allow a tax deduction of $10,000 from the individual's tax payable income. Provided that the investment achieves growth in its invested value, this tax minimizing scheme increases in its tax saving effectiveness. Lastly, income protection, such as insurance schemes is advised for anyone who wishes to generate wealth at an average cost of just 2% annually, with it being deductible. This would aid individuals in the event of illness or injury that basically hinders their wealth generation plan.
Capital gains tax will occur when a CGT event took place. The most common event is selling or giving an asset to someone. If an entity or individual determine that capital gains are likely to be achieved in the future, the individual should consider choosing a business structure that will minimize the capital gains and thus reduce the overall tax position at closure of business. An individual should choose a business structure that gives the greatest concessions. These concessions include small business capital gains tax concessions and 50% general discount. The 50% general discount is eligible for individuals and trusts, but it is not eligible for company. Superannuation funds and life insurance companies are eligible for only 33.33% discount. An individual or taxpayer must ensure that they pass the relevant tests at all times in order to qualify the 4 small business CGT concessions. CGT concessions can be accessed to if small businesses have turnover of less than $2 million or if the businesses have turnover greater than $2 million, but they satisfy the net asset test of $6 million. The small business CGT concessions include 15-year exemption, 50% active asset reduction, retirement exemption, and rollover. It is very important for individuals to work out which business structure is better for them to access most of the concessions, as taxpayer could reduce the capital gains tax to nil.
One of the primary considerations when choosing an entity is the ease of administration and cost. Substantially, all business entities have costs involved, in which incorporates the cost of purchasing an entity, the cost of initial registrations, the cost of ongoing renewals, and lastly, the cost of accounting and tax requirements. Generally speaking, it is interpreted that the more complex a business entity is, the more costly it can also be. Accordingly, a business entity which demands the least cost in formation and maintenance gains a great amount of advantage. If you're questioning why a sole trader or partnership would be chosen over other business entities which offers greater liability protection, it is because, among a few other benefits, conceivably the best element of a sole trader and partnerships is their simplicity in formation and its maintenance. Maintenance of these records as well as ensuring the entity remains on favorable terms can be extremely costly and tedious. Sole trader presents the least level of difficulty in terms of formation, with the requirement of only enlisting the business with a relevant agency in your state. Unlike these two, all other entities must have their registration and maintenance conducted through the local Secretary of State, and ensure that they comply to record-keeping rules in order to retain liability protections. Despite this, a complex structure may be more relevant and appropriate for the taxpayer's individual requirements. And therefore, weighing up the advantages achievable compared to the administration burden cost must be taken into consideration prior to setting up a business structure.
Each type of business structure has its advantages and disadvantages that need to be considered when deciding which structure suits the size and type of business and your personal circumstances best. Thus, it is essential to understand each of these aspects.